Hello, welcome to the European Open briefing for Friday, February 16th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. So it's another dismal day for the dollar. The US currency is down pretty much against all other major pairs. This comes despite the fact that global equities are continuing to recover. We had another positive close on Wall Street yesterday, and Asian shares are also mostly up this morning, although it is mostly thin trading due to many Asian markets being closed for the Chinese Lunar New Year celebrations. The dollar index did slump to 3-year low. It's also down sharply against the yen, falling below the 106 level. The yen didn't see any downside pressure from the Bank of Japan Governor Haruhiko Kuroda being reappointed for a second term. That announcement was made earlier today. Dollar weakness has pushed the euro to a fresh 3-year high, and the pound is back above the key 1.41 level. The Aussie and the Kiwi are also climbing to multi-week highs, as well as gold, which is at a 3-year high at the moment. So let's start with the dollar index. In the chart here, we can see we did have a bit of a support forming around the 88.50 area that proved to act as support twice in the past couple of months, but it now has breached that key support level, hitting 3-year low of 88.25. We did have stronger than expected consumer and producer price indices out of the US this week, but they didn't really help the dollar make a rebound. The US Treasury yields did though touch a 4-year high of 2.944% yesterday. They're currently trading around 2.90%. US equities closed up for a 5th straight day. They've now retraced more than 50% of that early February crash we saw a couple of weeks ago. There doesn't seem to be any major consensus on why the dollar is facing under such downside pressure. We do have that expectation that other central banks have or will start to normalize their policy, catching up with the Fed, therefore reducing the relative attractiveness of the US dollar. We also have the rising US budget deficit on the back of Trump's tax cuts and that massive spending bill as well, which could fuel inflation. Some are saying it's also due to unofficially the weak dollar policy of the new US administration, as well as concerns about trade protectionism, but overall doesn't seem to be a single factor explaining why the dollar keeps going down. We can see versus the yen, dollar hit its low since November 2016, falling below the key 106 level. Earlier today, Japan's government announced that it has reappointed Haruhiko Kuroda as the governor of Bank of Japan for a second term. They also appointed a new deputy governor who's known to be an advocate of ultra-loose monetary policy. So overall, that's a very strong sign that the Bank of Japan will maintain ultra-loose monetary policy for a while yet. Although it does appear that Japan's government is getting a little bit uncomfortable about the yen's strength, although yesterday we heard from the finance minister who didn't seem too concerned about the exchange rate. This morning we had the chief cabinet secretary Suga, who said that in the past 2 days we have seen some one-sided moves in the foreign exchange market. It remains to be seen whether or not the finance ministry will decide to intervene in the currency markets to hold back the yen's strength. Moving on to European currencies now, we can see the euro currently trading around 1.2530. It earlier touched a fresh 3-year high, 1.2555. Sterling is around 1.4125. That's a 2-week high. Both pairs are actually up more than 2% against the dollar this week. We don't have much in focus for the Eurozone, but we're going to have UK retail sales numbers coming up shortly in the European session. We did see a big dip back in December. If they do rebound in January, that would potentially reinforce expectations of a near-term rate hike by the Bank of England. But if we do see another weak reading, that could dampen those expectations. Also to watch out for is a speech by UK Prime Minister Theresa May at a security conference in Munich, Germany tomorrow. She will also be meeting Merkel today to discuss Brexit. So we could be seeing some Brexit headlines over the past couple of days that could potentially impact the pound. Moving on to the Australian and New Zealand dollars, both pairs are also sharply up against the dollar, the US dollar this week. The Aussie is so far up 2.2%. The Kiwi is in fact the biggest gainer out of all currencies against the US dollar. It's so far up 2.4%. We did hear from the RBA's Governor Philip Lowe earlier today. Although he was confident that inflation will gradually rise, he said that this pace doesn't warrant a strong case for near-term adjustment of monetary policy. That didn't impact the Aussie, though. The Aussie is still up 0.5% against the dollar at around 0.8984. The Kiwi is currently trading around 0.7426, also being boosted by a rebound in the New Zealand's manufacturing PMI, which rose sharply in January to 55.6. Moving on to gold now. Like other commodity currencies, the gold is benefiting from the weaker dollar. Commodities generally, the dollar denominated commodities do become cheaper for those holding non-dollar currencies, therefore increases their attractiveness. But it is usually strange for gold to go up so much at a time we're supposedly having improving risk appetite. This could be a sign that although the equities are rebounding, overall investors do remain concerned about the recent volatility, and also perhaps some concerns about the possibility of a sharp acceleration in US inflation in the coming year. But for the time being, I guess the main explanation is that the gold is rising on the back of a very weak US dollar. It did touch a 3-week high, $1,360 an ounce earlier today. And finally, looking at today's economic calendar, we can see the main focus will be UK retail sales. We're going to see building permits, housing starts out of the US later, as well as Canadian manufacturing sales figures for December. That's it from me. Thank you very much for watching and have a great day.